Hey there, Dan Martell here, serial entrepreneur, investor, and creator of SaaS Academy. In this video, I'm going to share with you how to design your perfect exit. It's a framework, a process that I've used to exit my two companies and helped dozens of companies exit theirs for the maximum valuation. So you're going to want to watch this video very specifically to understand how to do that. And be sure to stay to the end where we're going to tell you how to get access to my private training, Fundraising Like a Pro. If you plan on raising capital in the future, you're going to want to know the 3 phases of fundraising and the right way to approach investors. So if you're planning on someday selling your company, you've probably got a ton of questions around the process and what's important to potential acquirers and what should I be doing today. I know I did when I was starting my companies, Flowtown and Clarity. I knew that I was building a technology company and create a lot of value, but I wasn't sure what the process would ever look like, maybe, hopefully someday, to exit. And what I want to share with you today is the process that I not only extracted from my experience, but having helped dozens of my own coaching clients in the last 3 years go through that process to really maximize the value. Just recently I had one of my clients exit for over $90 million on about $900,000 in monthly reoccurring revenue, which is a huge multiple. But the reason why is because they understood, working with me, the value drivers for a potential acquirer to make sure that they optimize those for that exit. And that's why I call it the perfect exit. Now, this is different people. For you, it might be a public offering, it might be getting acquired by a strategic, or it might be bringing in a CEO to run your business. So a perfect exit is different for every individual. But what I want to share with you in this video are the strategies that I not only learned through my own experience, but I've had the privilege and pleasure of working with my coaching clients to increase the valuation for them using these 5 strategies. Number 1, know your numbers. At the end of the day, if you have a software as a service business, a SaaS business, okay, not a subscription business, although those are really cool, they're different. If you have a software product that people pay you for, ideally or typically on a monthly basis, there's only 3 things you need to know is how many new customers do I add to my product every month? What percentage of those people stick around? And third, how do I increase the average revenue per user or grow that value equation? Essentially, it's ARPU. Those are the 3 factors that you got to work with. If you haven't Googled what I call the churn flatline or a growth ceiling, okay, I call it a churn flatline, but essentially it's a growth ceiling, then go run your numbers, because you may be on a path in the near future, if you don't increase your acquisition, to hit that wall, that period where you're not able to add any new customers fast enough to overcome the fact that you're losing customers. And that's what a growth ceiling is. There's a wall, and then there's the point where essentially you're going to max out and you're just going to go sideways forever. So number 1 is just know your numbers. How many customers do we acquire? How many do we keep? And how do we grow or how much do we actually monetize that current account today? 2, visualize maturity. Now, this is to me, a pretty obvious question, but I love to ask my clients, it's what do you look like when you grow up? As a software product, and maybe you have this really cool feature, this tool that you do today. And I have a client that does, they just told me they just cracked $600K in MRR, okay? And they do this one very specific thing in the real estate space. My question to him is what does this look like in 10 years? What is the product suite? What problems do you want to solve for your core customers? Because if you don't visualize what the business looks like at maturity, then it's really tough to make decisions today that are going to align with that. And it's really easy to just get focused on doing this one trick, this one, you solve this one problem, you do it really well and everybody knows you about it, but then all of a sudden there's competitors and they show up in the market. And I've seen this especially in MarTech, marketing technology, everything from landing page competitors to email automation competitors to chatbot competitors, you name it. If you have a hook in the market today, you will not have it in 2 to 3 years. Other people will see the opportunity, come in, do a little thing better, have more funding, better product in UX, and they're going to take you out if you don't understand and visualize the maturity of what your business looks like and where you're going to get you there. Number 3, become the person. So one of my favorite things, I was working with a founder the other day, and they were struggling with some marketing stuff, and I said, look, we'll solve that. Those to me are skills. Those are things that are repeatable. Like there's a process that I've built out in our playbook that you can just use to get results in your marketing. What I'm more interested in is who do you need to become to be successful executing that marketing strategy? Or if you're a non-technical founder, who do you need to become to lead a development team? And those questions are more interesting. Wherever you're at in your business, what I know is that for you to get to the next level, you're going to have to grow. You're going to have to add some new mindsets, some new belief systems to allow you to show up as the kind of leader that can not only attract the team that's going to execute your vision for you, because at the end of the day, you're not going to do it, or you shouldn't. So not only do you need to attract those people, you also need to be the kind of person that can lead those people and collaborate to create those outcomes. And too often what I see is just ineffective leaders, ineffective founders that have not asked themselves the question, if I'm here and I want to go up there, who do I need to become to be the kind of person that's running that kind of business? If that's 10 million in ARR or 50, or like some of my clients, over 100 million in annual recurring revenue. Think about that, 8 to 10 million a month in revenue through their software every month. What kind of founder do you think that individual is to be able to run that level of organization versus the person that's starting with 5 to 6 staff people on their team? Like that, those are two different people. They approach their day differently, different mindset, different communication style, etc. And the question you need to ask yourself is, who do I need to become if you truly want to create that perfect exit? Number 4, invest ahead. So one of the biggest mistakes founders make when they're going after and they're creating value is they're not investing ahead. What they're doing is they're trying to be prudent. They're trying to build a successful business. So you read all these accounting books or these financial books, and they say we got to be making 15% net profit or 20% net profit. And I totally agree. The guy who wrote the book, Simple Numbers, Greg Crabtree, does all my financial modeling. I understand that stuff, but I also understand this. There's a thing called return on equity. Essentially, a dollar left in your business, how much return do you get on that equity over a 12-month period? And for some businesses, it's very low, like 30%, okay? Which is high if you consider the S&P 500 or whatever kind of returns you're getting in the stock market. But the best businesses can get 200, 300% return on equity. And the reason why is because they're investing ahead. They're looking at their unit economics of their business model. They're saying, yes, this works. This is profitable. We can do this. And then they're taking all that money and they're plowing it forward into the business. How are they doing that? They're doing it through their team they're hiring. They're doing that through investing in acquisition. They're doing that through investing in retention. They're doing that through investing in expansion revenue. All the things I mentioned at the beginning when you need to know your numbers. If you understand them, then you can understand how to properly deploy a dollar to get a return. So you have to invest ahead of your growth if you want to get the best possible exit for your business. One of my clients actually told me, I left $100 million on the table by not building this function in my organization, because when he went out to the market to essentially exit, one of the things that they said is, we're going to add this as soon as we acquire you. This is one of the big things we're going to add that you don't currently have. And he looked at what the impact would have been on his business based on their comps, and it was $100 million potential upside valuation, because they would have added that revenue to their business that they would have got valued on exit. That's huge. Instead, he just tried to make it extremely profitable and take money off the table. I'm not saying that's a bad thing, but you got to understand, when you take that dollar off, you might be giving up, $10 in the near future because you didn't reinvest it in growing your monthly recurring revenue. Number 5, drive value. For any acquirer, there's 2 things, okay? There's value drivers and value detractors. There's things that an acquirer thinks is really valuable, and then there's things that they go, oh, this is not so good, okay? So for example, not so good, a contract that you sign that fixed a price for 10 years with a very large Fortune 50 company, et cetera, that just doesn't make money. That would be a value detractor. Or the fact that you don't have a CTO because you didn't properly invest in your team and you outsource all your development to another company. That would be a value detractor on exit. What are value drivers are definitely the numbers that I mentioned, but those are just like the baseline foundational conversation to start. I mean, what people want to look at is how you innovate, what's your product roadmap look like, et cetera. So just understanding by talking to a potential acquirer and saying, hey, I know we're really small today, but in the future, we're definitely going to build this business, and we're going to probably eventually look at partners to connect with to do more. when you've bought other companies in the past, what are things you looked at that really felt attractive to you? What did you value? And if you don't feel comfortable going to a potential acquirer to have that conversation, then just reach out to any M&A banker. Okay, so search M&A banker SaaS in your city, and you'll find probably one or two. There's some great ones out there, but they will, and a lot of them have content on their website because it's content marketing, to explain to software founders like yourself how to understand the value drivers versus the value detractors to optimize your potential exit. So that's a huge thing, is drive value in your decisions today to increase the potential outcome in the future. So 5 steps to design your perfect exit. Number 1, know your numbers. Number 2, visualize maturity. Number 3, become the person. Number 4, invest ahead. And number 5, drive value. As I mentioned at the beginning, I want to share with you an exclusive resource called Fundraising Like a Pro. It's essentially my 3-phase process for raising capital. One of my tenets, my rules, my principles in life is investors don't want to meet you. They want to be introduced to you. So I'm going to share with you how to reach out and get those introductions the right way. I'm also going to share with you the phases for how to build a high level of demand in the right time to raise. There's only 2. You either do it here or there. And also the right way to pitch your company when you sit down with an investor. Those are all available, so click the link below to download that training, Fundraising Like a Pro. If you like this video, be sure to softly tap the like button, subscribe to my channel. If there's anybody that you think this video could serve, feel free to share with them directly. And as per usual, I want to challenge you to live a bigger life and a bigger business, and I'll see you next Monday. You probably have a lot of questions that are kind of big, empty question marks. Yeah, probably have a lot of questions.